want to invest. I'm investing. I want to buy stocks. I want to buy mutual funds. We talk a lot about investments more than we know about it. And that's why a lot of times you see people just doing stuff based on what they hear or see online. We rely so much on hot tips and we don't spend time sitting down and actually learning about investing. In this video, I want to talk to somebody who is new to the world of investing, who is saying, CSA, Coach Shola Adeshake, break it down for me. Or somebody who has been investing for a long time, who just wants to have like a crash course or like a knowledge revamping on the world of investing. Before you put your money anywhere again, you should watch this video and ask your sisters and your brothers to subscribe to this channel so that they can watch this video and learn more about it. Listen, good investing starts with self-awareness, not hot tips from your online coaches. Investing is personal, very personal. It's not about how you feel or what people feel. I see people hopping from channel to channel, from page to page, looking for the next best investment advice. Sit down, become aware, get knowledge, and understand it more. In this video, let's break it down. I want to understand investing, and I want to be able to teach it to my children, to my friends, and I want to start to invest more intelligently. I'm going to be sharing 4 points with you, and I hope by the time I'm done, you'll be able to share snippets from this video with your friends. Are you ready? Right. The first thing that I want to share with you is invest for your life and future, not for the internet. Hey, this internet, what it will do? Everything is online. I saw it online. They forwarded it to me by WhatsApp. And then you put your hard-earned money into things that are not compatible with your risk temperament. I qualified as a chartered accountant about 25 years ago. And let me tell you, my first investment, even as a chartered accountant, was in Ponzi scheme because I didn't know better. A friend of mine who was also a chartered accountant was the one who said, hey, there's one investment somewhere, they will pay you this and that. And blindly, I put my money. He collected his money. When it was 2 weeks for me to collect my own, we realized it was Ponzi. We lost and wasted money. Invest for your life and your future, not based on sentiments, not based on what is happening, what everybody likes. That's the first point. There are 4 things you should bear in mind under this first point. What is my current financial situation? How much do I have? How much am I earning? Somebody who is earning 1 million, 2 million tells you about cryptocurrency, and they say, I'm investing in cryptocurrency. You are earning 100,000 naira. Now you go and put all your money in cryptocurrency. Your financial situation is not the same. I know we want more and there will be more, but personal finance, we call it personal finance because it is personal. So understand your financial situation, understand your goals. This is a framework. This particular SGAR framework I'm about to teach, SGAR, is within our MENA course, MENA blueprint within Smart Stewards Academy. I'll tell you about it later. Because if you want to get ahead in this personal finance and investing thing, you need to invest in knowledge. Anyway, we'll come there. What is your age? A 60-year-old person cannot be investing like a 20-year-old person. If a 20-year-old person loses money, they will make it back. The 60-year-old, you use your pension, you use your savings to go and do a scheme that is not right. Recovery is almost impossible or will be too slow. And life happens. Many people have died prematurely because they were scammed of their hard-earned money. So understand your goals before you invest. Remember, I'm saying invest for your life and your future, not the internet. So understand your goals. Understand your age. Actually, that's what I've said. Then understand your goals. What are your plans for next year, for the year after, for this year, for this decade? So I'm talking about SGAR, but I've talked about age, and I'm talking about goals. Somebody who is married, their goals are not likely to be the same with somebody who is unmarried, even if they are the same age. Somebody that is married that has 4 children. You have personal goals, you have family goals, you have children goals, you have school goals. So you can't be investing like somebody who doesn't have children yet. So understand your goals. My short-term goals, my long-term goals, my mid-term goals. Then understand your risk temperament. Some people, when they lose small money in the stock market, they're unhappy. They start to sell their shares. They start to behave. They have to say, I woke up on the wrong side of the bed. In the earlier days of my career, I used to be very conservative, never wanting to lose money. But investment is not no risk. Investment is low risk. Do you see? So understand your risk temperament. Some people are conservative, some people are moderate, some people are aggressive. Understand your risk temperament. So under number 1, what have I said? If you need to invest for your future, for your life, not for the internet. Let me go into the next one. Now, understand the basic types of investments. You cannot excel at what you don't understand. And you cannot continue to leverage on other people's knowledge. Say, let me use your brain to understand it. No. If I am reading, the knowledge I gain comes into my brain, is useful for me. It can be useful for you. You have to learn and read by yourself. So very simply and very quickly, I know I have videos upon videos about investment. 4 categories or 5 categories of investment. I'm not saying go into them, but for the purpose of understanding this, let's talk about them. And then you go and learn more about them. You come into Mina as Master Wants to understand it better. The first category is what we call cash and cash equivalents. They are investments that are close to cash. You can easily liquidate them. Money market mutual funds, savings in the bank. I hope you don't have money in savings because they don't pay much, right? Fixed deposit. If you have a savings in the bank, you can collect it. Money market mutual fund, you can collect it immediately. Fixed deposit, usually 30, 60 days, you can collect it immediately, right? They are easily convertible. They are low risk, easy to manage. I have a client, she will say, Shola, I don't care what you are saying. I'm not doing stocks. I just want to do easy peasy kind of investment. When we looked at his portfolio between 2008 and 2018, he had made 480 million naira as interest on fixed deposit. It was earning 4 million per month. Of course, the capital was huge. We say, I don't understand any other thing. Just leave me with cash and cash equivalent, fixed deposit. So that may be you. If you are new to investment, have something that is stable. You are not investing in things that will make your high blood pressure go up. That's the first thing. The second thing is what we call fixed income securities. For example, treasury bills, right? You are lending money to the government, they're paying you interest in advance. Euro bonds, right? Fixed federal government savings bonds, federal government bonds. They tell you it is for this number of days, right? Or number of years or days in most cases, or year, or whatever duration it is. And then the amount you are earning from it is fixed. They tell you 16%, 18%, 20%, whatever it is. So it is fixed income. It is also safe because most times they are issued by the government or corporate organizations. Another one is commercial papers. For example, Dangote wants to raise more money for a part of his business. Say, 184 days, 20% per annum, fixed income. Talk to your stockbrokers or asset management companies. The third one is equity and stocks. You see everything you hear on the internet, buy stock, Okomoe, buy Zenith, buy GSB, buy that one. That's what we call stocks. They could be quite interesting in terms of helping your portfolio grow. Stocks are medium to high risk, right? They can help your portfolio grow, but they are not safe. If you put your rent in stocks, by the time you want to collect it, the market may be down. You don't have control over it. But what it means is that you are becoming a part shareholder, a part owner of a company. It's very, very, subjective because the prices of the stocks are dependent on many things, market forces and all of that. But you get dividends for the dividend paying stocks. The thing is that anywhere you're in the world, you can buy stocks, UK stocks, US stocks, Nigerian stocks, right? In Mina, there's a full-blown course that explains how it works. You can buy ETFs too under this category, exchange traded funds. It's a basket of funds, a basket of stocks, rather than buying individual stocks. Right? I love stocks. I've been buying stocks for a long time. But also for the long term. I earn dividends yearly and I love it. But stocks are not as liquid or as dependable. Yes, sometimes they give you aggressive growth on your portfolio, but anything can happen. When you need your money, it will not be there because it will be based on the price of the stock for that season. The next one is real estate. I love real estate. Real estate is not just liquid. You can't quickly sell a house now if you need money, but you can buy fractional real estate, you can buy full real estate and rental income for the long term. But I'm talking to somebody who is saying, explain investment to me. So it can be a long-term goal for you, right? Something you want to do in the next 3, 5, 10 years. So I've talked about investing for yourself. I've talked about the basic investments. Under the basic investments, another one is commodities, right? You buy gold, you do agri, right? And coffee, agriculture, oil, and all of those things. Now, number 3, if you are new to investing, is then allocate funding per month. Investing is not what you do once in 2 years. I'm investing. Allocate from your salary, from your budget, something monthly. Because you don't need a lump sum to start. By the way, if you have 1,000 or 2,000 or 5,000 in mutual funds, you have the right to be called an investor. You don't need a lump sum to start, but you need consistency. So out of your budget, how much do you want to spend on a monthly basis going into your investment? For example, on a monthly basis, I spend XX amount in stocks. I spend XX amount and I throw it into my mutual funds. You see, XX amount in real estate, fractional real estate, or what you call REITs, real estate investment trust. So don't just say, okay, they say we should invest, you invest today. The next time you're investing is in 2 years. Even if it is 10,000, even if it's 20,000, once you have that allocation in your mind, send money to REIT every month to build discipline and momentum. Again, it's not how much you're starting with, but the fact that you are starting. The fourth thing I would like to say is, it is then not enough to say, yes, I'm now investing monthly. You should track, you should review, you should adjust. It's not set and forget. It's not you start and forget. Track your contributions. Are they being captured? Track your performance. Track your alignment with goals. Do they align with my goals? Am I on track? This stock market, is it for me? Or each time I do stocks and it comes down, the price comes down, I have high blood pressure. You must track and understand the one that works for you. The fact that everybody is shouting about it does not mean you should do it. I encourage you to join Mina. Get Mina. Mina is a money mastery blueprint within Smart Stewards. We teach you how to make, manage, and multiply money within an accountability setting. We have a huge community of people who will be cheering you on. You have access to courses, access to worksheets, and if you do Mina Pro, you will have access to our goal setting app. In the comments, I'm going to put the link. Make sure you join Mina. Join Mina already and learn more about investing. What you track, you will improve. What you ignore, you will lose and it drifts. I hope to see you in the next video, but until then, I want you to share this video with at least 5 of your friends and make sure they subscribe to this video. Remember, this is about teaching you how to make, manage, and multiply money and to build wealth. My name is Shola Adeshaki, lead coach and founder of Smart Stewards, and I am rooting for your financial success. See you in the next video.